eyes on ECB. It will be a busy week with central banks' monetary policy meeting in Australia and Europe, inflation and trade balance of China and United States, and Japanese and European GDP. The importance of this week and the bank's decisions are the first. The data are more updated with the war and inflation effects, and the second, the central bank's reaction with the level of tightening policies will be more specific. Let's review the most important events and data of the week ahead together. Number 1, Australian Central Bank. While the labor market is growing well enough to ensure the businesses and employees about the stable growth in this area, inflation is still improving. The latest published data also show that the GDP in the first quarter increased by 0.8%, much more than 0.5% estimated. More reasons for additional tightening policies from Reserve Bank of Australia, which seems on course to hike rates again in June. The meeting and its announcement must be positive for the Australian dollar. Number 2, US trade balance. Under pressure, income and increasing inflation in the last months decreased the demand, resulting in a lower imports. Also, the news quarantine and its restrictions in Shanghai, the most prominent Chinese port, can be another reason to have fewer imports in the United States compared with other periods. That could be the first narrowing in a trade balance since October 2021. Expected data must be positive for the US stock markets. Number 3, Chinese trade balance. Since most of May, Shanghai and some other areas were in lockdown, it's likely to see the export to fall sharply. However, since reasons were temporary, the reverse is expected to compensate for this slowness in the following months quickly. As a result, the trade surplus for China is likely to lower in May to 50.65 billion from 51.12 billion in April, which is negative for the Chinese yuan. Number 4, European Central Bank. For this meeting, we expect the ECB to announce and end its bond purchasing program, and that net asset purchases will be completed by the end of this month. However, it's average to expect the conservative ECB to start raising the rates in this meeting. Still, they will probably signal that rate hike is imminent as inflation is above 8% and it will become an essential European concern. As a result, euro must be stronger against its crosses. Number 5, US inflation. After 8.3% in April, now target moves a bit higher at 8.4% in May as driving factors are still hot. Gas prices are increasing sharply in line with oil, while higher electricity and food prices also make the inflationary shocks inevitable for most consumers. However, since the most inflation drivers are energy and food prices, core CPI is expected to fall to 5.9%. Suppose actual numbers are the same as anticipated numbers. In this case, talks about the housing interest rate hike in September will become washy, which is negative for the stock markets and positive for the US dollar. And finally, number 6, Canadian labor market. The week will conclude with the Canadian labor market data. It's estimated to see the unemployment rate is unchanged at 5.2% with 55,000 newly created jobs. Overall data must confirm the economic progress in Canada and support the Canadian dollar against its crosses. Thanks for watching this video and hope this week is going to be an amazing week for you.